This episode of Between the Lines is brought to you in partnership with AXA Insurance. In a world that needs new energy solutions, AXA is facing into risk. As a leading global insurer, AXA partners with businesses, breaking down barriers to accelerate energy transition. Hello and welcome to Between the Lines, the podcast that dives deep into the stories redefining APAC's reinsurance landscape. We are recording here in the newsroom of InsuranceAsia News in Hong Kong. I'm Mithun Varkey, Editor-in-Chief of InsuranceAsia News. In this episode, we'll be discussing the cyber market in Asia Pacific. We have with us Aidan, who is just back from our very successful cyber conference in Singapore 2 weeks ago. There is much to discuss about the cyber market in the region. In other stories, we'll wrap up the big NatCat events in the region recently. Also, we have a bit of information on the year's losses from some of the big global brokers. We will delve into their reports. We'll also discuss Marsh McLennan's rebranding, Marsh's greenfield litigation in Australia, and we'll take you through some of the big broker M&A in the region. As always, we'll bring you some of the stories that the team is working on. In this episode, our special guest is Rama Chandran, Head of Marine for Rokstone, which is a specialty MGA that just launched in Singapore early this month. Rama, who is a seasoned marine underwriter, will discuss the broader marine environment of the region, supply chain disruptions, and Rokstone's strategy for the region.
Asia is a growing market. We are seeing the shift every year in terms of global premium. They're shifting from Europe, Americas to Asia, and that has been on a trajectory and a positive trajectory for the last decade or so. And I think in a matter of 10 years, that would probably on equal par with the rest of the world, in fact, rest of Asia. So we see that as a great proponent in terms of representing Asia, especially in marine.
Joining me today is senior correspondent Aidan Gregory, reporter Joana, Nguyen, and Roshan, Nambiar.
Thanks, Mithun. It's good to be back.
It's good to be back in Hong Kong this week, where the autumn weather has finally arrived.
Aidan, we've seen your stories around the impact of AI. Tell us a little more about what you're hearing on the cyber market in the region.
Indeed, it was great. Great to be back in Singapore. I was sort of rediscovering the city-state after more than 6 years away. The timing of our cyber risk summit couldn't be more timely, given the large-scale cyber attacks that we've seen in recent weeks on Jaguar Land Rover in particular, but also Azai in Japan, and I believe Qantas also had another data breach in the last fortnight. So cyber attacks are really, the top of agenda, and for risk managers in corporates, these events are very frightening, particularly, given the scale of the damage that can be incurred, like not just financially, but also reputationally. It's very, very embarrassing when companies get hacked in this way. Many companies that come under a cyber attack, the fines for data breaches in many countries now are pretty severe. So it's very much top of the agenda. And the conference last week was really interesting. Ahead of the conference, I interviewed the head of cyber underwriting for Asia Pacific at Beazley and AXA XL. At the conference itself, AI was really at the top of everyone's agenda. AI has created this arms race between threat actors and, professionals that guard against cyber attacks. Hackers are using AI in many ways. It's often quite simple. AI makes it a lot easier to impersonate people. And, this is leading to a rise of social engineering attacks on companies. You can use AI in a host of ways, including something as simple as just being able to write a passable email in English, which, for many of us that have come under phishing attempts in the past, that's often not the case. But AI is giving threat actors more sophisticated ways of breaching the defenses of the companies, and it also it's giving hackers the ability to sift through very, very large amounts of data that they've potentially stolen from companies.
What do you see these increasing cyber attacks impacting the cyber insurance market?
The cyber insurance market's in a little bit of a strange place, actually, because it's gone through a pretty significant period of price softening since the end of the last hard market cycle. And, there's been this massive influx of capacity from lots of insurers. And, there's now a very developed local cyber insurance market here in Asia Pacific, mostly grounded in Singapore. And there's an increasing volume of large programs that can be placed locally in the region without having to go to, in more international markets like London. However, at the same time, there's been this influx of capacity, but then cyber insurance is a very, very underpenetrated product, like particularly in Asia Pacific. But there's optimism among carriers and brokers that is now beginning to change, like, particularly given the news agenda and the fact that we are seeing these large scale damaging cyber attacks. It's leading to a lot more interest among particularly small and medium enterprises, but also large cap corporates in protecting themselves against these threats with cyber insurance. So the market's in a bit of a strange place at the moment, but it is changing very rapidly, especially with the rollout of all the new AI technologies and, the escalating threats that corporates in Asia Pacific face.
Great, Aidan. It was quite interesting, and we did see your stories from the conference. Moving on from the cyber market, let's look at the catastrophe losses around the region. We've had reports from Aon and Gallagher on the loss experience so far this year. Joana, can you give us a wrap-up of what the brokers are saying?
Right. So insurers has seen benign nat cat activity across all regions. So globally, insured losses for the last 9 months of this year were at a minimum of 114 billion US dollars. However, this is still substantially exceeded the 21st century average of 83 billion US dollars. For economic losses, nat cat resulted in 203 billion US dollars in the first 3 quarters of 2025. This is well below the 21st century average of 287 billion US dollars, and this is the lowest since 2015. So the third quarter of 2025 was characterized by, a relatively low frequency of major disaster events. Disasters in the fourth quarter would need to cost an additional of 135 billion USD to make 2025 at least an average year.
Right. And what's been the experience in Asia? We did see a few events in Asia, and especially in the third quarter.
The main issue for Asia is the high protection gap. From the economic loss perspective, the largest event in Asia in this quarter is the seasonal flooding in China, which cumulatively cost approximately, 12 billion USD since June. And only a small portion of this was covered by insurance. Another notable event is the monsoon-induced severe flooding in Punjab between Pakistan and India. It caused over 3 billion in losses combined, with only a fraction covered. So you can see the protection gap, unfortunately, remains a big issue in this region.
That's true, especially in parts of India and China. We have extensive flooding, but very limited insurance coverage. And that's a bit of concern. The big event we had recently was a 7.4 magnitude earthquake at Cebu in the Philippines. Roshan, you've been speaking to some of the people on the ground, and you did a story around it as well. Can you tell us a little bit more?
Yeah, so on October 10th, a powerful earthquake struck the Philippines near Cebu. It caused widespread devastation, but it also raised some important questions about the financial recovery and risk management. So to get a clearer picture of the situation, I reached out to some loss adjusters. One of the responses I got was from the Crawford Philippines. They shared that the combined insured and uninsured losses from the quake are estimated to exceed over 35 million US dollars. The way I accept, they anticipate a wide range of claims from structural damage to commercial to household properties, and even losses in infrastructure and business operations, particularly in manufacturing and retail. I also spoke with some other adjusters as well, one being VRS adjusters, as well as Masco, which is a local adjuster. Both of them highlighted that the Philippines' long-standing vulnerability to typhoons and other calamities has deeply influenced how insurance and reinsurance are managed in the country. Local insurers have also relied heavily on offshore reinsurance treaties, but however, the foreign reinsurers are very selective. They only accept treaties under their own risk standards. Interestingly, I found out that VRS Adjusters Philippines added that there's now a noticeable trend towards increased risk sharing with local reinsurers. This suggested possibly a more maturing insurance market in the Philippines, with some local players starting to take on more catastrophe risk themselves. However, the ongoing protection gap remains a global issue, with only about 43% of catastrophe losses covered by insurance, and that leaves a significant share of economic losses uninsured.
Absolutely, the protection gap remains a problem across the region. But we have some interesting numbers from Vietnam, which has had a few windstorm events recently. Joana, what do the numbers tell us?
Right. So due to the double impacts from La Nina and global warming, Vietnam is expected to have, 14 to 15 storms in 2025. This is higher than the average of 10 storms in other years. So according to the government data, the country has incurred about $1.3 billion in economic losses due to NatCat since the beginning of 2025, with Typhoon Matmo and Typhoon Boloi, which both happened in the last 1 month, bringing extensive flooding and damage. The $1.3 billion losses so far are about 1/3 of last year's, which was a record last year due to the impact of Typhoon Yagi that caused 90% of the losses. So I reached out to the chairman of PVI Insurance, Dương Thanh Giang, and he told me that why the typhoons caused, serious flooding, its impact on the insurance market in Vietnam is expected to be limited thanks to the improved flood resilience strategies of the government, insurance companies, as well as, the people following the Typhoon Yagi last year. And similar to the Philippines and the rest of Asia, protection gap remains an issue, and there are still many properties that only have, fire insurance, but not natural disaster insurance.
Right, so moving on from NatCat, the other big news recently was the Australian Federal Court restraining Marsh from pursuing litigation against Greensill or its insolvency administrator in the High Court of England or Wales. This is called as an anti-suit injunction. This is in relation with the ongoing Greensill litigation that involves IAG, Tokyo Marine, and Marsh. So Marsh has had gone to the courts in the UK to try and move the litigation from Australia to the UK. But the Australian courts have said that you cannot pursue or seek relief in any of the courts outside of Australia. So now Marsh will have to continue to litigate in Australia regarding the Greensill case. And it's a very important development for this case in Australia. In other news, we've seen a couple of M&A deals around the region, especially among brokers. Aidan, you've been tracking some of these deals. Can you tell us a little bit more about these deals?
So the merry-go-round of Australian insurance M&A is continuing to spin. And the last fortnight has seen, a trio of deals that we've covered. These transactions include Howden buying Omni in New Zealand. It's part of a string of brokers in Australia and New Zealand that Howden has rolled up into its operations down under. There's also Gallagher Insurance has acquired To Insure, which is an Auckland-based brokerage. And then we also saw Steadfast merge its underwriting arms to create a new specialty MGA known as Prevail, which is focused on providing cover to Australian farms, but also high net worth Australian individuals, insuring expensive homes and expensive cars.
Right, there's a lot of broker investment happening in the region. We usually see a lot of deals in Australia. This time we've seen a few in New Zealand as well. I think this is the third we've seen in New Zealand so far this year.
Yeah, the New Zealand market itself is always quite surprising when you look at some of the results of the big Australian insurers, like just how profitable New Zealand is as a market despite its small size.
We also had an interesting story on Markel's ambitions for the Greater China region. Joana, can you fill us in?
Yes, we spoke to Chelsea Zhang, who is the managing director for Greater China of Markel, and she said that the company is looking to become the largest syndicate in North China in terms of GWP by the end of this year. In 2024, they reported a 220% growth in the country, and is also targeting double-digit growth in 2025. And this year is also marking Markel's 10 years anniversary since their operation in Shanghai was set up. The two lines of business that they will focus on is marine and AI risks. For marine, this has been pretty much dominated by Chinese insurers. And they are looking to, Markel is looking to bring expertise from not only the underwriters in China, but also from London to address marine as an, movable risk that extends overseas and into various global regions instead of treating this as a domestic risk. AI is also an area where traditional insurers tend to remain cautious, waiting to see the loss track record and industry experience to see, how it will perform as a risk. However, Markel, they want to be the forefront in this space. So they have been insuring a lot of AI risks for clients, for example, like AI operated ports and terminals, AI robotics driven manufacturing and operations. So she said that the company is preparing to take on risks that traditional insurers may shy away from. Amid the current softening state of the global insurance market in general, these kind of specialty expertise is the key differentiator for insurers to set the right underwriting conditions and risk selection. And there's a lot more insights that Chelsea shared with us. So we recommend you to have a read at the story.
Thanks, Joana. That's a wrap on the biggest stories we've had in the past 2 weeks. Let's talk about what we're going to work on in the coming days. Of course, we are going into the SIRC season. The whole team is going to be down in Singapore covering the Singapore International Reinsurance Conference. We're also doing a conference daily, which is a magazine that we produce at the event based on our interviews and developments from the conference, and it is distributed at the conference on a daily basis. The stories will also be on our website. So there's a lot of exciting stories coming up as part of our coverage from the conference. Quite a lot of interviews with some of the biggest names in the reinsurance market in the region. Aidan, so this is going to be your first SIRC. What's on the agenda?
We have lots of interesting interviews lined up for SIRC. I'm due to, for example, I'm due to catch up with Beasley's Asia head.
Right, Joana, what's going to keep you busy at SIRC?
Right. So besides reinsurers or reinsurance brokers, we also reached out to modelers or climate specialists like Verisk or Perils, as well as rating agencies like AM Best and Fitch. So a lot of exciting insights coming. So stay tuned.
As you can see, we are speaking to some of the biggest reinsurers and reinsurance brokers in the region, as well as some of the most exciting specialty players and emerging underwriters in the region. So there's going to be a lot of stories, a lot of insights, and exclusive information coming from our coverage of SIRC. Right, so there's a lot of work to get on with. Great meeting, everyone. Let's get back to work. Our guest today is Rama Chandran, a well-known name in the world of marine insurance. Rama leads Asia for Rokstone Underwriting, the global MGA that established a hub in Singapore this month. Rama has over 40 years of experience spanning facultative and treaty business and is considered one of the most influential voices in the marine market. Rokstone, which has secured $25 million of capacity from Tokyo Marine Gill, will underwrite the full spectrum of marine classes including hull, construction, cargo, liabilities. Rama will discuss Rokstone's proposition in the region as well as the emerging trends in marine insurance around Asia. Listen in. Hello, Rama Chandran. Welcome and thank you for joining us. How are you doing? It must be a very busy time for you.
Thank you, Mithun. Pleasure is mine. Now happy to do this as well. So indeed, I think since we last met a month ago at the Ayumi, I think has been an interesting journey for me.
So congratulations on your new role and launching Rokstone in the region. Marine insurance is certainly in the spotlight now due to a range of emerging challenges, geopolitical, supply chain disruptions. I wanted to start with Rokstone's launch and understand your proposition in the region a bit more. So the question is, what brings Rokstone to Asia? And as a very seasoned underwriter in the region, what attracted you to the opportunity? And could you tell us a little bit more about Rokstone and your Asia proposition?
I'm very happy to do that. In the last 18 months, after I first met Rokstone team, namely James and Nguyen. So that conversation started about 18 months ago. For me, I think that has been a discovery for me to a large extent about Rokstone, and the journey has been nothing but remarkable in terms of what has transacted and what discussion we had. And I'm very glad to be part of Rokstone now. I think that's really puts the whole enterprise of marine into perspective in a market that we are very familiar with. Now, Rokstone, it is employee owned. So that tells you something in terms of how the DNA is. And the DNA is simplified and very focused, is to accelerate, innovate through technology, ownership. As Rokstone has a very flat structure, and explore new territories, new product to test the boundaries. And I think the fact that they're constantly testing the boundaries, it's one of the draw that, after 18 months that I'm here as a part of Rokstone in this launch. I mean, their tagline, redefining risks, it just encapsulates everything we do under Rokstone. So technology, global reach, enhance the Asia platform to have a global presence and being the launchpad here, and talent. I think in a global arena, talent is the most challenging part of any proponent nowadays, and I think Rokstone has a foundation in what they represent, and that's a big part in this as well. So Asia is a growing market. We're seeing the shift every year in terms of global premium that's shifting from Europe, Americas to Asia, and that has been on a trajectory and a positive trajectory for the last decade or so. And I think in a matter of 10 years, that would probably on equal par with the rest of the world, in fact, rest of Asia. So we see that as a great proponent in terms of representing Asia, especially in marine. I think Marine Asia would be the platform or the launch pad for Rokstone into Asia Pacific. And we just, like I said, talent is a big part into this. So I think the inspiration would come from getting the right talent to further extend Rokstone's footprint. The 5-year plan of Rokstone has been into specialty, which marine is under, commercial and consumer as well. I think these are also a key part, and technology is a big proponent in some of this as well. So Marine Asia, it's something myself and my 2 team members, as it stands now, we bring a century of experience in this Asian market. We are very, very close to a lot of the producers in the market. So I think that helps us in a business that's still very much a people business, and trust forms the foundation of insurance business. So I think that helps in this journey. And we are also very privileged to have TMK, part of the TMK, Tokyo Marine Holding, which is a very, very well-respected, reputable name in Asia. So I think, the spring in the launch pad is just got a bit thicker, that we could do even more in Asia Pacific. So we cover all the products. That would include all of marine, except protection and indemnity, which is very well served in Asia market. I think that's where we would be different, bespoke, and with deep understanding of the market. I think that's the whole purpose of this launch pad into Asia Pacific as part of Rokstone and Eventum Group. I mean, I just wanted to touch a bit more on Rokstone. I mean, in terms of, they place nearly 50% of the 80 MGAs in 2025, global MGAs, recognizing the business shaping the future of landscape. So they have been quite active in the global market in respect. So I think to transfer some of this expertise into Asia Pacific in a mid-term, long-term basis is their ambition as well. So I think I could not have found a better partner. I'm just glad to be part of the Rokstone at this point.
Great. I mean, you've had quite the launch. I mean, you've secured capacity from Tokyo Marine Kim. You've also gone about and hired a team already since your 1st of October launch. You're 3 people in the region now. So what are your immediate priorities as you settle into this role? What's keeping you busy as you kick off?
It's almost a startup in terms of the branding and naturally the engagement of our past clients and producers, and to re-engage them has been the priority to make sure that we are articulating this correctly, and also to explain the strength of Rokstone and being part of the Aventum group. I think they are all very familiar now in the last 2 to 3 weeks, but naturally this requires a further engagement to explain. But the comfort level has been quite phenomenal in terms of the acceptance of Rokstone and TMK in the weeks that we have seen. So we're also articulating our appetite structure. This is an evolving market, naturally, as you have alluded to, Mithun. I think we need to be aware what's happening in the landscape, and naturally we also need to tweak the appetite accordingly in terms of where some of the growth opportunities are. And Asia is seeing tremendous asset building in one form or the other. So I think we are definitely would want to be part of this relationship as well. And I think I just wanted to touch a bit more on a bit of a call out to the Rokstone team and Aventum team in London, which helped us to hit the road running in terms of getting everything in place and helping us tremendously. And at this point, we have already bound risks already. So only after 2 weeks in operation. So it has that help, that resource that was made available to the team and me, and I think it was been phenomenal, if I could call it. And I just want to have that call out to Rokstone and Aventum in that respect.
Great. So you've already started binding policies.
We have.
Wow, that's a very quick start. You truly hit the ground running in that sense then.
Thank you.
Surely. So, I mean, obviously, right, all marine risks except P&I. So in terms of underwriting for Asia, how do you sort of tailor your appetite and strategy? I understand that, I mean, Rokstone's a big global player, but they're new to Asia. Of course, you have quite a lot of experience. What is your underwriting strategy, as it were, for the region?
That's a great question, Mithun. I mean, Asia, as you're fully aware, is absolutely diverse. And each country has its own nuances, the people, the structure, the insurers, the producers. I think it just, one basket would not fit in terms of how we do business in each of the country. It just has to be very bespoke in terms of how we handle. And it's a changing landscape, continuously. And I think, the fact that we have been in this market as a team, for easily 3 decades, has given us a bit more so-called, paved road, in terms of seeing some of the clients and also the producers in the market. And we generally have a very deeper understanding of the landscape in each of the countries. I think that also is helping us tremendously in terms of the engagement. I mean, the last 2 weeks, we have reached out to all major producers in every country. Naturally, Japan, being part of Tokyo Marine Group, is one that's excluded in our plan. But otherwise, I think we have tremendous response from everyone in every specific country. So I think that's really has helped us in terms, and marine is a very complex class. So I think it requires a bit more of the engagement. We have continuously engage them every year in their own country. So I think this will be a process that will be still ongoing. I haven't started the travel yet, but that will happen very soon in terms of meeting all the producers and the clients. Some are coming over to see us as well. So I think during the SIRC. So I think it's just the timing has been perfect for us in terms of doing this. But TMK's reputation as part of the TM Holdings, I think that also has made the job slightly easier in terms of explaining and having the re-engagement with a lot of our clients that we have done in the last 3 decades. So it has been a very, very positive so-called experience so far. And being part of Lloyd's Asia, that allows us to even penetrate a lot more quicker in some of the markets already. And the branding itself of Lloyd's and TMK, I think it puts us in a tremendously good position.
You said you won't write Japan, obviously, because part of the Tokyo Marine Group. What are your key markets that you'd look to serve from Singapore?
Singapore would remain our key market, but further afield in the likes of Korea, Hong Kong, Taiwan, Indonesia, Malaysia, as well as Thailand, would form the next bulk of the opportunities that we are seeing. So it will be quite widely spread across all countries in Asia. And naturally, we have a lot of relationship in these countries already. Just how we're going to move forward. And because we have a multiple of classes of marine, except P&I, including hull and liabilities and construction risk and cargo and STP. So I think it allows us to so-called give a whole approach in terms of the marine risk that constitutes different aspects for each client on the different classes within marine as well. It naturally would be different from some of the countries. Some countries are more in the construction, and some will be more in the shipping side, and naturally others will be more on the cargo side. So I think the opportunity for us to transcend between the different class helps us in terms of articulating this and the opportunity that we could see all aspects except P&I on that front.
I mean, between the classes, is there a preference for you? I mean, between the different marine classes, is there something that you see there's more opportunity than the others?
I think it's quite evenly spread in terms of the opportunities, but naturally, I think for us, profitability is paramount, and we would have to optimize the portfolio based on terms of the cycle and the pricing as well. So I think gives us a lot of maneuverability in terms of how we're going to deploy the capacity in a market as diverse as Asia, and also offer very bespoke arrangements for some of the partners and clients across the different jurisdictions as well. So
I'd imagine, when you said bespoke a few times, so I'd imagine Rokstone is trying to look at the more complex end of the risk spectrum. You're not trying to compete with the conventional marine insurers. Would that be a fair assessment?
That would be. I think, marine is a complex class, and it's getting more complex with a lot of challenges, and the shipping sector is going through tremendous changes as well. So I think we are in the beginning stage of some of the greatest trends that we will see in the next decade or even further. So I think complexity adds on to this, and also relationship may give us an opportunity to articulate this more clearly to the clients as well, in terms of what are some of the emerging risks that also are expected to be in the play in the years to come as well. So I think it's a great opportunity for us to articulate this and talk to them about the actual risks. So I think that gives us opportunity. Naturally, complex and some not so complex will be part of the whole scenario. I think trust, commitment forms a big part in a lot of the insurance contracts and the buyer's sentiments behind this as well. So
you're talking about the sort of transition that we're seeing in the marine industry. It's not an easy time. There's quite a lot of disruptions around the world. Shipping challenges, supply chain disruptions. We're seeing, tariff wars. China has just imposed a tariff on US-linked vessels now in a tit for tat move. How do you see that the sort of the landscape evolving in the region? Do you see that affecting the business, and in what ways?
geopolitics, it's a major component in terms of some of the supply chain disruptions that we have seen. We've seen this in the last 5 decades in some form or the other. It rears its sometimes ugly head a bit in terms of some of the areas that we have seen. And it goes through multiple jurisdictions in terms of and territories in terms of the geopolitics. Hopefully, some of the sentiments that's happening now that would see some reduction in some of the geopolitical stresses that we have seen in the last 2 years and especially in the last 2 years as far as rate C is concerned. So I think tariff would have an impact. I think nearshoring would happen more in terms and globalization probably would be slightly adjusted in terms of having more manufacturing in multiple locations. So the ton mile would be impacted from a shipping perspective in the movement of cargo primarily. So that would have different variants in terms of type of cargo, the sectors, the containers, the cargo, the tankers and the bulkers would have different variation in terms of how we see this. But intra-Asia trade has seen significant movement upwards in the last 2 to 3 months. And we think that this would be in a very positive trajectory going forward, just to balance some of the impacts that we are seeing through the trade tariffs as well. So I think it will prevail over time. Shipping has been very agile in decades. They have found ways to maneuver this, and then if the demand is there, I think that would be the major so-called parameter to watch. As long as the global demand remains slightly in the positive territory, as it's still been projected in 2026, I think the trade would change directions to some form, but naturally there would be other routes that's been taken into consideration. So hopefully, I'm cautiously optimistic, but I must admit there would be some volatility in the near term in terms of how some of the biggest economies do their trade in some respect. But trade within Southeast Asia, trade within Asia is growing significantly, and I think this would be some of the buffer points in terms of how global trade would evolve in 2026.
The intra-Asia trade will be a big focus for you since you're here now.
Naturally. Yes.
Yeah.
I think naturally being here closer to the ground, closer to the assured gives us an opportunity in terms of moving a bit more actively into this space. But naturally, we are not just confined to intra-Asia. Trade would be on a global basis. We still see that going between Europe and Africa, Indian subcontinent. I think also is a big part in this whole game. So I think naturally it's just a shifting sometimes between certain location, but manufacturers and economies and trade people are very agile, and they will find new grounds in terms of how they still can manufacture and sell their products. I think as long as the demand is there, I think we'll find a solution.
Just quickly on that, Wade, from an insurance perspective, do you see that, how do you see this impacting the insurers? Is it from a demand perspective? Is it from challenges for underwriting? Or do you see that come through, some of these challenges come through the claims in terms of elevated claims?
It is a mixture of both. From a trade perspective, because if you take a look at it from some of the transition to avoid Red Sea, it took a longer voyages down through the Cape of Good Hope. So naturally, it is some adversity in terms of some of the weather element going to the Cape at some period of the year. So naturally, there are some elevated claims experience in some of the routes, naturally. But I think from a otherwise shipping in boxes has been very, very successful. And I think 90% of all finished goods, it's on container ships. So I think naturally and shipping has done very well. There are some areas that we still could improve. I think some of the engagement UMI has with the IMO is to make some of the changes to make the risk even better. So I think naturally these are still being worked upon, but it's even in some respect when we talk about decarbonization and all that in terms of biofuel and ammonia and hydrogen and all that, it's still at an infancy stage in terms of what could be the expectation of some of the claim scenario. But I think this is something that the world is watching, reinsurers are watching, but we also want to be part of the transition, to promote the transition in terms of some of the decarbonization. So I think it's an element of learning, at the same time promoting commerce in these sectors and the transition to decarb as well. So I think this is when I first came to the industry 40 years ago, there was very little engagement with multiple stakeholders. Now I see the reverse. Everybody wants to find a solution. Every aspect of the whole fraternity wants to find a solution, and there's been so much of collaboration. We're not there yet completely, but the collaboration has started tremendously, and I think that's very, very positive. And I think we all will get our heads together at some point and find a solution
Sure.
at some point. Yeah.
That's about all the questions that I have. Is there anything that you would want to add? Are there any significant trends that, you mentioned decarbonization now, any other trends that you're observing in the market or in Asia that you want to discuss?
I wouldn't specifically put it as only Asia. It's a global trend as far as marine insurance is concerned, and shipping in particular is concerned. I mean, 97% of all shipbuilding is in Asia, with China, Korea, and Japan, based on the number of vessels that can build. So technology is now a big part in terms of some of even the construction of ships now. Technology and robotics are being extensively used. So we are seeing a phenomenal change in technology being used. This also would transcend in the shipping side as well. There's a lot of technology being used. I think this is also in expectation after the pandemic that we are seeing less seafarers unfortunately. I mean, I'm very passionate about seafarers being one in my early life. So I think, but I think there are less people keen to take up shipping, seafarer as a career. And I think technology is helping in some respect in terms of mitigating some of this aspect as well. So I think that would probably be one of the significant trends. And of course, the alternative fuels is still very infancy, but I think this is a space to watch from a claims perspective as well as in terms of understanding what goes on behind the technology as well. So I think these are some of the trends we would see. It won't end now. We've still got some legs to go, but I think as marine insurers, we just need to have our ears on the ground, engage all stakeholders continuously to make sure that we all find a solution at the end of the day. I think that's the premise of our engagement in Asia.
Great, Rama. Thank you very much. It's been a fantastic conversation. Thank you very much for your time, and once again, congratulations, and wish you all the best. Wish you and Rokstone all the best.
Thanks, Mithun. I really appreciate that. I mean, we are just overjoyed to be part of this.
That's all from us in this episode of Between the Lines. We'll be back again with a special episode in 3 weeks after the Singapore International Reinsurance Conference in the first week of November. There'll be a lot to talk about, so make sure you don't miss it. In the meantime, you can connect with us on LinkedIn. Make sure you're subscribed to our daily and weekly newsletters that are delivered straight to your inbox. And of course, we'd love to hear your feedback on the podcast. Email us at editorial@insuranceasianews.com. I'm Mithun Varkey. Thanks for listening.